Okay, so you want to purchase a home and you just went to a lender and a lender told you that you are approved for an FHA loan. But do you know what an FHA loan really is? Let's go over all the benefits and downside from an FHA loan.
The couple team.
Hi, my name is Edwin Gonzalez with the Couple Team, and we're brokerage by Partnership Realty Inc. here in Palm Beach County area in Florida. If this is the first time that you're tuning into our channel, welcome. But before we start with today's video, let's make a little disclosure. I am not a lender. However, I'm a realtor. All the information that you're going to be hearing here is that I was able to get it through the internet, with my experience on the field, and talking with lenders who have worked with me in the past. Okay, so now let's begin. What is the purpose of an FHA loan? Okay, the government decided to make these type of loans for people with little money in advance for closing costs and also with low credit scores. So other than is government insured, understand that there's some another benefits to it. So if you have a credit score of 580 and above, you're only able to put 3.5 as your down payment. Now, don't get scared. Let's say that you don't have 580. Let's say that you have below 580. Oh no, I'm not gonna be able to purchase a house. You know what? You can still be able to make it because FHA said, you know what? Okay, no problem. From 580 and above, you're only gonna put down 3.5% down. But if you have less than 580 and you have between 500 to 579, just come up with a little bit more money for down payment. So now you're gonna have to put 10% down. Make sure that you go and talk with your lender because he's gonna be the one who's gonna be really giving you the guidance and all the benefits. There's other benefits that lender can do, and they know more information about this type of loans, so you can get more information from them. But I want to be able to share with you all the information that I was able to gather. So okay, so from 580 and above, 3.5% down on your new home. If you have less and you have between 500 to 579, then you're gonna put 10% down. Now, one of the benefits of an FHA loan is that you don't have to be a first-time home buyer, but you have to use it as your primary residence. And what exactly are they gonna be looking at? Well, they're gonna be looking at two things. Other than your credit score and all that, they're gonna be looking at your employment history. Have you been in the same industry for the past 2 years? Let's say you're working in a restaurant and then all of a sudden you change to become an electrician. Well, even though you're making more money now, maybe they're gonna say, we don't think so. Maybe yeah, maybe no, but most of the time they're gonna say no. Why? Because you gotta be at least 2 years of the same career, the same industry, basically. Now, if you study for that industry, they take those studies, those years that you were in college, and now they take it, they take it with your employment, So let's say that you left college a year ago and you have been working in the industry that you went to school for, and you've been another year. So those 2 years, now they can qualify you. But if you just change industry, most of the time they're gonna say no. Another thing that they're gonna take into consideration is that your debt to income ratio is gonna be less than 45%. Basically, they wanna make sure that you're making the money, but they wanna make sure that your debt, doesn't go above, it doesn't go over what you're making, or you're like so tight that you're not going to be able to come up with you with the payment, with the mortgage, with any improvement that you got to do, or let's say that something came up and now you got to fix something in the house or whatever. So they want to make sure that your debt to income ratio is less than 45%. Okay, so another thing about FHA loan is that they are limited. And what I'm talking about is that, let's say that you have somebody who's going to help you with closing costs. Let's say your family, or let's say even the seller from the property. Well, FHA is going to say, well, hold on a second. You guys can help, but it's not going to be more than 6%. Okay, so maybe the seller can give you, let's say, 4% for closing costs, and then you have a family member who wants to give you 2%. Okay, so FHA can say, okay, no problem, because it's up to 6%. You know, that doesn't mean that a seller gonna give you 6%, but all I'm saying is that you can talk to your seller and say, listen, can you help me out with some closing costs? And maybe they can say yes, maybe they can give you 2%, maybe they can give you 3, 4, 5, but understand that they're not gonna give you more than 6%, because even if the seller says, yes, I'm gonna give you 6%, and a relative or a family member wants to give you more, FHA is gonna be like, nope, we can't do that. It's gonna be up to 6%. Another thing about FHA is that they have minimum amounts. They're subject to minimum amounts. And what I mean by that is that, you know, here in Palm Beach County, they will not give you more than $373,750 for a single family home, you know. And talk to your lender, because let's say you're getting a duplex, a triplex, or, you know, FHA can still give you the loan, but they have different restrictions. So let's say that you found a home for $400,000. So FHA is going to be like, okay, we're going to give you up to $373,750, and then you come up with the rest. Okay, so you know, they have those restrictions. So depend on the area, depend on the type of home. Talk to your lender once again, because depending on your area, they're going to be able to say, okay, this is the amount that FHA is going to give you, and then after that, now you know what to look for. If you don't want to come up with more money, then you know what to look for. Okay, so now that I got in my mind that I need to, if you're in Palm Beach County and I want to get into an FHA loan, I gotta look for a house that is going to be less than $373,750. Another thing about FHA loan is that they're requiring additional home inspections. Some people like it, some people don't. But in reality, what FHA is trying to do is that you are getting into a house that is going to be worth it. Why? Because FHA doesn't want to be like, okay, we're going to lend you the money, and then all of a sudden, you know, you can't live in the property. Let's say something, the roof fall down on you or whatever. You know what I mean? So they're going to require additional inspections, because they want to make sure that the house that you are acquiring is going to be worth it. One of the things that I like about FHA loans is that they are assumable, meaning that they can be transferred. Now, one of the downsides about an FHA loan is that you got to pay upfront for your mortgage insurance premium, and that is usually about 1.75% of the total of your loan amount. Another downside to it is that every year you got to pay your annual premium, meaning that if you have a 30-year commitment, for 30 years you got to annually pay for that premium, and that is usually about 0.85% of the total amount. Okay, so I hope you guys found some value in this content. If you're looking to buy, sell your property in the Palm Beach County area, or even anywhere in South Florida, you know, let me know, and I'm here to help you. You can contact me directly at 561-379-2826, and I hope you guys have a wonderful